transactions on the show. We've got Mr. Sanjay Singhania, the MD and CEO of EPACK Prefab Technologies, joining us on the show. Mr. Singhania, morning and thanks for your time. Before we talk about everything else, let's start by talking about your order win. You've received a 165 crore rupee order for cell and module manufacturing. Can you put some more light on this order in terms of what is the execution timeline? What's the pipeline looking like for FY27, and by when will you start seeing the financial synergies from this order?
Yeah, good morning. So you're very correct that we have received an order of 165 crores for making the pre-engineered building for a module and cell plant of a solar company. And the timelines for this project are very tight in the sense that we have taken up the challenge to make these two buildings in 4.5 months, which typically would be at least 12 months. So as you may already be knowing that we already hold a world record in terms of the fastest construction of an industrial building, and this building, when completed, these two buildings for the solar company, would be the fastest industrial building construction in the country. The two buildings are around 20 lakh square feet. So when we talk of 20 lakh square feet and completing the two buildings in 4.5 months is a mammoth task, but our team is very well prepared and we are pretty hopeful to meeting the timelines of this project. And as far as the overall pipeline is concerned, again, very happy to say that last month, month of May, was perhaps one of the best months for us in terms of order booking. So besides this order, we have got also a lot of other orders, and the funnel looks very good. And typically in our business, if the first quarter order booking is good, typically the entire year's volume is determined by the first quarter. So yes, things are looking pretty good for us right now.
Good morning, Ashesha this side. I understand that things are looking pretty good, but can you quantify that for us? What is the order book position right now? Because I believe at the end of fourth quarter, you did tell your investors that company is targeting an order book of over 2,000 crore rupees for FY27. What is the order book position right now, and how have order inflows been this year so far?
Yeah. So our opening order book was around 1,120 odd crores to start with. And thereafter, in the last 2 months, we have booked substantial orders. I would say our current order book as on 1st of June would be more than 1,350 crores. So there has been an addition of 240, 250 crores in spite of the fact that, last 2 months we have already been dispatching material. And the further pipeline of, orders and the deals which we have is pretty strong. And again, I think this month would also be a great month for us in terms of order booking.
Mr. Singhania, I'm going to have to request you to hold on and stay on with us. We've got Mr. X to you and keep the conversation going. First of all, thank you so much for waiting by. My next question to you was on your margins. You've said that for FY27, margins are expected to be north of 10%. In FY26, your margins were 10.5%. So can we believe that the margins will be able to cross this 10.5% barrier? And also, secondly, I understand that there was a drop in the margins on a year-on-year basis, or in fact, it was rather flat. But the margins were affected by steep steel prices. Any normalization seen on that front so far?
Yeah. So our overall guidance for the financial year 27 is our margin will be intact, around 10.5%. And in fact, last year our margins have improved. Previous to that, it was about 9.9. So it improved to 10.5%. And it was only a dip in the last quarter of the financial year because of the steel price increase. Although, we are covered, 80% of our orders are covered through back-to-back steel, orders with the mills. But yes, 20% exposure is there, and that led to some 0.6% of reduction in the margin. As far as this quarter is concerned, yes, because of the steel price increase, there will be some impact in this quarter. But as far as the full year guidance is concerned, 10.5% is very much doable and will be, intact for us.
So that's as far as the margin figure is concerned. But Mr. Singhania, I wanted to go back to the order book point that you were making. 1350 crore is the order book position as on the 1st of June 2026, and you're targeting about 1925 to 1950 crore of revenue in FY27. Is your guidance intact basis the order inflow so far?
Yes, very much. Yes, very much. Like it is very much doable for us. We have the all the capacities in place already. The order book is there, and as far as the execution at the site is also concerned, there has been a great execution speed that our team has demonstrated. So yes, I'm very, very, very hopeful about this growth. And if we are able to do this 1930 to 1950 kind of a figure, then it will be for the fifth consecutive year that the growth of the company on a CAGR basis would be more than 30% plus.
Okay, sounds good. Mr. Singhania, let's talk about segments and data centers as a theme has been largely evolving, and that's a fast-paced and fast-growing theme. How are you and the company looking to capitalize this opportunity? Any plans on this segment, or are there any developments on this front?
Yes, it is a very exciting space right now, data center. And as you know, a lot of data centers are coming into the country. And most of these data centers, like time is a big constraint as far as the construction is concerned. And there, that is an area where, like prefab buildings come into its role. And very happy to say that as of now, we are doing 3 data centers. And our role right now is most of the, inner walls and the facade build, portion that we are doing in a building. We have not done a complete structure part of the building and the complete building as of now, but we are in discussion with two key players to engage into, making a complete data center for them. So it will happen very soon. That will know we'll be constructing a complete data center as well.
Mr. Singhania also wanted your thoughts on the capex plan that you have. I believe you have about 150 crore of capital expenditure lined up in FY27. Two-part question. One, what will this be for? And second, what will the impact on debt be? Because I believe you have significantly lowered your debt to about 32 crores at the end of previous quarter, at the end of previous year rather. What will the impact of this additional capex be on debt then?
So for this 150 crores, we are not raising any money. We have sufficient equity in the company, and everything will be funded through internal accruals or equity in the company. We already have around 130 crores of equity money with us, and we are funding 150. So I don't see a challenge there. And as far as the timelines are concerned, like we are putting this 150 crores towards setting up a greenfield plant in Gilot, Rajasthan, that is for the insulated sandwich panels. And again, the second plant is being put up in, Gujarat. So there we are, ramping up our structural steel facilities. There we have put up a facility of 50,000 tons of structural steel fabrication. Yeah, to ramp up the total steel fabrication capacity to around 2 lakh tons per annum.
Okay, understood. Mr. Singhania, on that note, thank you so much for your time. It was so good to be chatting with you. And once again, thank you so much for waiting by so patiently. Thanks so much.
Thank you so much.
Thank you. Okay, viewers.